Hey, what's going on? Good afternoon. Welcome to Trade. But I am excited to talk to everyone tonight, or this afternoon, I should say. It's only, 2:40. But that being said, as always, we have to get our disclaimer out of the way. Everything we discuss is solely the opinion of Trading Options Network. And do with the information what you will. But please take responsibility for your actions. That being said, also be sure to like, follow, or subscribe on all of our social media platforms to stay up to date with everything. Get tips, get stocks of the day, all of that fun stuff. But that being said, let's go ahead and get right into it. So the S&P looking pretty green today. It's looking pretty green. The interesting thing about this, however, is we're not really going anywhere. So if we actually look at the chart, we did gap up a little bit, but truth be told, we actually went down a lot during the day and slowly started crawling back up. So I put on the 5-minute chart. Why is this so small? That's interesting. What the heck? If I look at... is that a new feature on FinViz? I've never seen it do that before. But that being said, again, we look at the chart throughout the day. Why is it doing that? I don't like this at all. All right, so there we go. So we gapped up right here. And again, until about, 12:30 Central Time, we were going down, and then we started climbing back up to where we opened up at. But again, nonetheless, I have no clue why that's happening. I'll have to figure something out here. But again, we are just kind of going sideways as I had expected. And if you listen to our last trainings, I expected to go kind of sideways for the next, week or so. Maybe even a little bit longer until we finally I shouldn't say gap up or down, but decide to move up or down. One thing I did want to discuss, one thing I haven't really pointed out, we have our RSP. That's the equal weight ETF. So obviously when we look at the map, NVIDIA, Microsoft, Apple, Google, Amazon, Tesla, Eli Lilly, Berkshire Hathaway, all these companies, ExxonMobil over here, even Costco and Walmart, clearly they have a lot more weight in the S&P than all these other smaller companies. I shouldn't even say small companies. They're not small companies by any means. But in terms of the amount of weight they put into the S&P, these companies have more of a say, per se, in what the S&P does. But if we look at the RSP, the equal weight ETF, what if every single one of these 500 stocks in the S&P 500 were equally weighted? Well, if we look at this, even though the S&P itself has been flat for the last couple weeks, this has still been going up. And this is actually what I was discussing the other day here. When I was saying, let's actually go back here. If we look at these performances, even though technology has been down, as was consumer staples, communication services, not consumer staples, communication services. I saw the C and just, for whatever reason, thought consumer staples. Communication services, even though they are the two bigger sectors in the S&P, the rest of the S&P has been mainly green. So when you put an equal weight on all of the stocks in the S&P, I'm not surprised to see that we're continuing to move higher. Now, the real question, though, excuse me, the real question here is what ultimately is going to win this tug of war that we're kind of having between the bigger sectors of the S&P and the smaller sectors of the S&P. Now, history would say technology is going to lead the way. That kind of rhymed as well. But nonetheless, technology does seem to lead the way quite a bit because obviously it is by far the biggest sector of the S&P in terms of weight. But lately, it seems like it's been losing and all these other sectors are teaming up and kind of going to battle against the technology sector. And ultimately, I do believe that technology, while it is going through a nice little pullback, if I go ahead and open up the chart here, it's definitely on a pullback, okay? But are we going to go back down to this 190? I highly doubt it. I highly doubt it. I think ultimately what's going to happen, we might go down to the 200 moving average or something along those lines. Or heck, we might even, go down and tap that 20-day moving average and bounce off of that. And ultimately, I think technology starts moving higher again. That's my guess. I don't know if that's going to happen, but I do believe that the rest of the market is going to start pulling up technology until technology decides it can get back on its own feet. So we'll see what happens there. But again, we look at the S&P, and overall, because technology has been down, it's been keeping down the S&P from making new all-time highs. And we're just going sideways for the last couple weeks. So who knows what's going to happen? I mean, we look at the CCI, and if the CCI goes back over 100, it could start moving up. That's a pretty big if, though. I mean, it's still at 65, so we're still, well above zero. But then we look at the MACD and say, hey, you know what? The MACD almost looks like it's going to be rolling over, and it's more or less showing a potential pullback in the S&P. That's why nothing is ever 100% when it comes to trading. We can look at all different kinds of technical analysis, and some technical analysis would show bearishness while other technical analysis will show bullishness. The bottom line is we can only go off of, I guess you could say, intuition, but we have to trade off of technical analysis. There's no doubt about that. But the real question is, how do you decide what technical analysis is correct and what is wrong? And the truth is, it's experience. Because while I could say the CCI, in my opinion, is more or less right than the MACD, there will be times where I'll say the MACD is going to be more consistent than the CCI. And right now, I'm actually looking more for another jump, another bounce in the S&P before we see any pullbacks. I mentioned it the other day. I would not be surprised if we rallied up until the election, and then after the election, then we start getting our pullbacks. That's my prediction. I don't know if it's going to be right. We'll see. Bottom line, though, is, we just kind of have to play it by ear. If you follow me on TikTok or Instagram or Facebook, you'll see some stocks of the day that I've been, looking at. So we'll go ahead and pull a couple of those up. One of them was CRM. And not only was CRM actually it was for today. It was my stock of the day for today. We went ahead and opened up a bear position. It was a 250, 240 bear put spread that expires in 3 weeks. All we want this to do is get down to 240 in the next 3 weeks, and we'll have a max gain. And it's going to be, we did about, I think it was around $3 of risk for $7 of reward in that spread. That's if it expires in 3 weeks and the price of CRM is under 240. So I really like that trade. And earlier this morning, I had this as my stock of the day, looking for a nice reversal, continuation pattern. And we're absolutely getting that. I could absolutely see the 20 crossing over the 50 as well in the next couple of days. Usually when we have earnings like this and it's a big sell-off, we usually do get some red days after that. It's just a continuation of that sell-off. So I like where this one's going. Let's see, what's another one? JCI, I like on a bull watch list. And it looks like it is actually moving up over this... not there, I'm sorry, right here, this resistance. It crossed over that resistance. Now, I'm not going to open up a position yet because look what happened the last couple of times it crossed over this resistance. Here it went up and it failed. And here it barely broke up. You can even argue. I mean, heck, technically speaking, I could easily do this and move it down just a little bit, and you know, I could bring it all the way down here if I wanted to. But nonetheless, right here, it definitely was strong resistance. Here, we gapped up well over it and finished underneath this resistance line. So finally today, we're breaking up over the resistance line. Why am I not opening up a position yet? I need to see proof that this resistance line is no longer resistance and is now working as support. So I want to see this come up, and then I want to see a little bit of pullback, and I want this to bounce off of this, you know, what will now be a support line. If I can see a bounce on this support, then I'll be opening up a position for sure. For sure. And then last but not least, the other one was, oh gosh, why can't I think of what it was off the top of my head? It was, oh yes, of course, good old Duke Energy. So again, this one looks like it might be wanting to break up. Okay, we're right at that resistance line. Okay, but oops. But again, I do want to see it not only finish above. Okay, and I could even go ahead and draw this in as well. There we go. All right, so we do have our flag pattern. I mean, I can do it so many different ways. I can do it like this as well. Boom. This one would actually give me a more of a bullish sentiment on the stock, because we're getting closer to that tip of that triangle. But either way, it does look like it wants to break out, but we need to see it finish above it. And then again, very similar to JCI, I want to see this line act as support versus resistance. It's been resistance for a little while here. I want to see it act as support. So Duke Energy could absolutely be a stock that we could be opening up a bull trade in very, very soon. So again, overall with the market, I think we go sideways. We just kind of have to look at the utility sector, the industrial sector. Those are the sectors that have been kind of kicking butt. If we go ahead and go back to here again, so the industrial has been kicking absolute major butt. Okay, as we can see here, utilities has been as well. There we are. So utilities is doing awesome. And then technology has been struggling. Technology's been struggling. Hence why I was looking at CRM, because I think if even though CRM is already rolling over, if technology does have another rollover, then CRM is going to get absolutely hammered. And I can see technology having a little bit more of a pullback, as I mentioned, possibly down to the 200 MA, which if we go ahead and put that back in, SMA 200. All right, so that's at that 206 level. So as of right now, so there's no question we could easily hit that 200. We may bounce off of this 20, but I do believe that the technology sector is still going to be in a little bit more of a pullback before it starts going up. Hence why I really liked that CRM for that bear trade today, after it's showing so much weakness throughout the trading day and after earnings yesterday. So that's what I have for you today for our training. I hope you liked it. I hope you learned some stuff, and I hope you're making money. That being said, I will see you all tomorrow for a new training. And again, be sure to follow us on Facebook, Instagram, TikTok to stay up to date and get those stocks of the day as well as tips of the day.